How does a business identify its financial position at any one time? This is why we have the balance sheet. I'm Thomas Harwood and welcome to the Accounting Student, where we create free and short videos so that you can learn about accounting. Today's video is looking at the balance sheet. As we have seen on the previous videos on the income statement reports the profit or loss in a given period. The income statement is one report within a group of financial statements that will be produced by a company for each period. Another financial statement which is fundamental and goes hand in hand with the income statement is the balance sheet. The balance sheet, which is also known as a statement of financial position, shows a summary of the business's assets, liabilities, and shareholders' equity at a given time. In other terms, the balance sheet is a snapshot of what a company owns and owes, and the amount invested by shareholders. The balance sheet can be split into three main sections, and they are assets, liabilities, and equity. The difference between the total value of assets and total value of liabilities equals the equity of the business. Equity can also be known as net assets, net worth, or capital. The structure of the balance sheet closely follows the layout and function of the accounting equation. You can extend your knowledge and look at this in more depth in our video on what is the accounting equation. Let's now have a look at how the balance sheet looks. At the top we have the title as the balance sheet for ABC Limited for year ending 31st of December 2017. The title is followed by the assets section, and this can be split further into non-current assets and current assets. Non-current assets are assets that will be in the business for the long term and usually more than 1 year. For example, property, equipment, and motor vehicles. And we have current assets, which will be the short-term assets which are likely to be in the business for less than 1 year. The current assets are usually listed in terms of how liquid they all are. This looks at how easily or quickly the asset is or can be turned to cash. The most liquid asset is placed at the top of the current asset section, and most of the time the current assets will be listed in terms of liquidity on the balance sheet as cash, debtors, inventory, and prepayments. We then have the liability section, which is broken down into non-current liabilities and current liabilities. Non-current liabilities are in the business for more than 1 year and consist of mortgages and long-term loans. And current liabilities are in the business for less than a year, and these consist of creditors, short-term loans like bank overdrafts, and accruals. Finally, we have the equity section, which consists of the owner's equity and retained earnings. Then the net assets value should equal or balance to the equity of the business. So that was the explanation of the balance sheet. If you enjoyed it, press the like button. If you have a question you want answered, leave it in the comments below and we'll try our best to answer it. And if you're not already subscribed, make sure you click the red subscribe button to keep updated with the Accounting Student. Thanks for watching, we'll see you next time.